DG responsible for manufacturing enterprises.
Good morning, Chairperson and honorable members. My name is Melashton Makwabe. I'm the acting DDG for Legal and Governance.
Okay, those would be the main officials here, with one or two others that are supporting ourselves. So you have the slides in front of you. I imagine most of our colleagues, both in the media and in the committee. Slide 2 is a very quick overview of each of the entities that account to DPE. I'm not going to go through all of them. Safe to say that we indicate in each case what's the state's shareholding, which is largely 100% in all of them, except that you have a few entities in Denel where the state has entered into partnership with private sector entities, and the state might be holding a minority share in some instances and a majority share in others. The numbers also indicate the revenue that is generated in each of these entities, the net profit and loss as per the last financial year, the total assets under the management of that particular entity, and the number of employees in these entities. In the square or rectangle in the lower right-hand side, you get an aggregate number. So the total revenue of these entities, 284 billion rands, which is quite substantial. It's a R250 billion rands. Assets of over R1 trillion rands, employing over 124,000 people, plus minus. But if we aggregate all the profits and the losses, then you have a net loss of 1.6 billion rands, which is precisely what we need to change as we go on. Slide 3 just reminds us of where we're coming from over the last year or so. Once the Gupta leaks came into to take its review of what an inquiry into what was happening in just one of these entities called ESCOM, and these were some of the newspaper and media headlines that we actually saw. The next slide reminds us on the right-hand side of what the President Ramaphosa said during the State of the Nation address earlier this year, that we will intervene decisively to stabilize and revitalize state-owned enterprises, that government will take further measures to ensure that all of the state-owned companies fulfill their economic and developmental mandates, that these SOEs cannot borrow their way out of their financial difficulties, and we will therefore undertake a process of consultation with all stakeholders to review the funding model of SOEs and other measures. We will remove board members from any role in procurement and work with the Auditor General to strengthen external audit processes. And this is the year we will turn the tide of corruption in our public institutions. And in many ways, Chairperson and honorable members, this provides the brief for what the department has to do between now and the elections next year, so that we can leave behind a reasonably solid platform for Mr. Hendricks, you're one slide ahead of me, so that we can actually leave behind a fairly stable set of entities, if that is at all possible. On the left-hand side of the slide, you will see that the way we interpret the mandate is to review the boards of all of these entities, and we'll give you a progress report in each instance, improve the operational efficiencies, and there are some examples of that where boards have undertaken the beginnings of this work, restore the financial sustainability and reduce the dependence on the fiscus. This is hard work, but we'll give you a progress report in that regard as well. Stamp out corrupt practices at SOCs, and this is largely through the many forensic reports that both the SOCs and other entities of government have been undertaking. and the kind of actions that boards, the new boards that have been put into place, have been taking as well, and we'll give you some progress in this particular regard as well. But I must point out that eradicating corruption is a difficult exercise, because many who are guilty or likely to be guilty of malfeasance in these entities are finding different ways of evading their responsibility in respect of what they've done in the past, or are beginning to create narratives and do even political mobilization in order to ensure that they gather new friends in order to defend themselves once the fingers begin to point in their particular direction. And the last point, to ensure that the mandates of these various entities are consistent with what the state's developmental agenda is. The next slide gives you an overview, Chair, of some of the challenges that the SOCs face. They're divided, as you can see on the left, into internal challenges and external factors as well. Internally, and we're very familiar with this in this committee, the issue of governance, and here by governance we mean the level of integrity and experience in boards and in management teams, the manner in which these boards have executed their fiduciary responsibilities, the extent to which the boards have also exercised oversight and provided leadership at a strategic level to the entities themselves, or even to the extent to which, as we have learned through the ESCOM inquiry, the boards themselves or members of the boards have been participating or enabling corruption in one form or another. At the financial level, corruption and misgovernance and mismanagement has resulted in many of these entities finding themselves in extreme difficulty. And so in many entities, insufficient revenue is being generated by the core business of these entities in order to cover all of their operational costs. And we then have a challenge in respect of, let's call it operational liquidity on the one hand, that is the funds that are required to undertake the day-to-day operations. In some instances, there isn't money on a month-by-month basis to even pay salaries, so management teams and boards in the beginning of a month hustle around to financial institutions and others in order to find the cash that is required to actually pay salaries. And yet in other instances, creditors are not being paid by some of these entities as well, which has other implications for the operations of the entity. The other internal factor that we mention here is the operations of these entities, and we'll give you some examples as we go into the details, where there will be delays or cost overruns. I think you've had that in Transnet in terms of the pipeline. You've had that in ESCOM in relation to Medupi, for example. But there are similar features elsewhere in some of the entities as well. Failure to keep up with technological improvements in that particular field that the entity operates is another serious challenge, because if that adaptation doesn't happen fast enough, these entities tend to fall behind in terms of their ability to generate the right kind of revenue to keep themselves sustainable at the end of the day. The word strategy, of course, is often used to indicate a so-called turnaround or a new direction that we want to actually take. But once we have boards that are ill-equipped to provide the right kind of leadership to entities, then strategically these entities fall behind as well, and they are unable to keep in touch with and in line with developments in the specific industries that they actually work in. The external factors Excuse me. These are issues that government as a whole is going to begin to attend to, as I will indicate later on. And that is the question of clarification around mandates, clarification around where investments take place by SOCs. So what you might find in some instances is that there might be two or more SOCs or SOEs that are creating the same kind of manufacturing capability. And if there were better synergies amongst them, you could save a fair amount of cash on the one hand and introduce a lot of efficiencies as well. But these are matters that government is aware of and will be dealing with in due course as we go forward. Similarly, accountability lines get blurred sometimes. Again, this is partly a consequence of what has happened in the state capture process, as this committee is very familiar with. And once you have people in the executive who might be more than just tolerant of what is going on in some of these entities, then you have a toxic mixture which impacts on the quality and nature of governance and oversight that is supposed to be actually exercised. Similarly, there are policy issues and regulatory issues. One of the biggest challenges that we face as we go forward is the question of administered prices, for example, which has an impact upon the economy more generally. So some entities have been increasing their revenue not because of additional, let's call it sales, or higher volumes of what they are doing, but by increased tariffs. But the increased tariffs also have an impact on the rest of the economy and the competitiveness of the South African economy more broadly as well. And the last but most not insignificant challenge is in respect of financing, both in the short term and in the long term. And in each of the entities, we're beginning to grapple with, on the one hand, short-term financial stability, but on the other hand, long-term financial sustainability. And of course, the long-term financial sustainability is dependent upon the kind of business and operating model that each of these entities actually work with. And so the new boards have to deal with the past in some ways, in terms of dealing with corruption and other issues. They have to deal with the present, which is trying to get the businesses back on their feet and ensure they can generate enough revenue to meet their operating expenses. And they have to deal with the future in terms of dealing with the strategic questions and challenges that each of these entities and their industries are actually confronted with. So you will see this pattern emerging in each of the entities as we go forward. So the next slide is just a reminder to ourselves that we've been in office for just over 5 months, and during this time several of the boards have changed. Some before some of us took office, for example, Eskom changed in January this year. Some during this 5-month period, like Denel, Transnet, and SA Express. And there are still further changes that will happen to SAFCOL and the LXCO boards in the course of the next 4 to 6 weeks. As we get into Eskom, you will see that not only has the board changed, but they've appointed a new CEO and COO. There are resignations in some of the entities. For example, the Denel CEO resigned, as did the Transnet CFO. The Denel CFO is currently undergoing a disciplinary process as well, and similar things will begin to happen elsewhere in these entities as we go forward. But essentially in this 5-month period, the basic theme would be dealing with the past, surviving the present, and creating the basis for sustainability into the future. So let me quickly take you through each of the entities, Chair. Firstly, Eskom. And there's a graphic on that slide which indicates, in case we might not be familiar with this, that Eskom operates 25 power plants, and you can see the majority of them are concentrated around the Mpumalanga area. You can study that in your own time. The next slide is an interesting comparison over a 10-year period, and which in some ways spells out the dilemmas that the Eskom board has to deal with. This we've got from a professor at the UCT Business School. Forgive the secret that's at the bottom, because we're not in a public domain, so it's not a secret document any longer. But total installed capacity in 2007 versus 2017 is 42,000 versus 44,000. Actual sales, you'll see, has declined, 218,000 gigawatts per hour compared to 214 in 2017. But if you look at the revenue over that 10-year period, it's approximately 40 billion versus 177 billion. So it's a four times increase. The average selling price has increased from 18 cents to 83 cents. Coal purchases in terms of metric tons is approximately the same, 117 and 120. Coal costs, however, have gone up about 5 times. 10 billion rands versus 50 billion rands. Employee costs have gone up about 3 times, 9 billion versus 33 billion. Employee numbers have increased massively, 32,000 versus 47,000. And borrowing clearly has increased quite substantially as well, 40 billion to 355 billion. So it's an interesting comparison of over a 10-year period. And this is what creates the dilemma for the current Eskom board and management and government as a whole in terms of how do we move forward. For example, what do we do to increase revenue? How can you increase sales? Not increase revenue just because of additional tariffs, but additional volumes being actually sold. Similarly, how do we ensure that coal costs don't move in the kind of direction that is indicated here? And there have been some challenges in this regard, which the coal supply industry hasn't done too well at, and which Eskom is working on, and hopefully in the next 6 to 8 weeks we can come back to you, or the Eskom board can come back to you with a report in this particular regard. Employee cost is a major, after the coal cost, the major cost item that Eskom has to deal with. And what we have here is a significant increase in the management layers of Eskom. But these are all issues that the Eskom board and management is beginning to deal with. The next slide gives you some indication of the financial ratios as far as Eskom is concerned. So EBITDA is earnings before interest, tax, depreciation, and amortization.